technology services, be it solutions, be it developers, be it AI solutions, are going to get us closer to $1 trillion economy compared to the other things we're doing.
Put value into perspective for the retail investor who is thinking, honestly, I don't care if money stays in the country. Why should we care?
Instead of going to buy 5-10 shares in the stock market, why don't you buy into an ETF that has those 5-6 stocks? And you're buying one which gives you exposure to all the 5.
Why are Kenyan investors not getting exposure to this investment class that is the most exciting? We use our phones all the time. We're always on our phones.
So it's build Kenya, buy Kenya.
The demand for cloud and AI infrastructure, so data centers, high performance compute, and now GPUs in Kenya as of today is valued at $1 billion. This capital is flowing into other industries other than technology. The world of cloud, you have to guarantee customers 99.999% uptime. Because when this goes down, it means you cannot access your banking app. Then how do you do transactions? This product is designed for customers that really understand technology, they see the opportunity, and it's more than just the ROI. It is those people in the industry. So as an example, if you look at our private investor roundtable, 70% are people who run tech companies. So they already know the pain point. So they can put in, and somehow, again, their companies are going to be the ones that are running on that infrastructure.
Welcome to Just Money Podcast. This is a space where big ideas, smart money, and real opportunities converge. I'm Just Ivy Africa. Every week, we speak to the sharpest minds in business, investment, and innovation. If you're new here, subscribe to our YouTube channel, The Kenyan Wall Street, for new episodes weekly, and find us on TikTok, Twitter, Instagram, Spotify at Just Money Podcast. In today's episode on money and technology, we're joined by Erick, an investment banker with decades of experience. He's built and led firms across fund management, investment banking, and capital market development in Africa. Joining him is Derrick, a tech founder and innovation strategist leading Africa's charge towards digital self-reliance through infrastructure, talent, and scalable solutions. Before we continue the conversation, this episode of the Just Money Podcast is proudly brought to you by HISA app. HISA is powering borderless investing for Africa, giving you access to both local stocks like the Nairobi Securities Exchange and global giants like Apple and Tesla. The episode is also proudly brought to you by HFM, a global multi-asset broker in forex, commodities, indices, shares, and crypto, you name it, founded in 2010. Get a tradable bonus of up to $500 on your first deposit. Plus, for the first 25 days, your losses are matched with bonus funds only on HFM. Finally, thank you to Kofisi, who have provided our beautiful, beautiful set. Kofisi creates world-class spaces for ideas like this to thrive. Welcome back to another episode of your favorite money podcast, Just Money, with me, Just Ivy Africa. Let's just get straight into it. Today, two very incredible gentlemen have decided to impart their knowledge on us on a very crucial topic, alternative investments, particularly in AI infrastructure, data centers. Derrick, say hi.
Hi.
How are you?
Very well.
Yeah. So for people listening to this podcast for the first time, people who don't know who you are.
Okay.
Tell me who you are and why should people stop the scroll and pay attention to what Derrick has to say today.
Absolutely. My name is Derrick Gakuu. I consider myself a very passionate innovation expert and a fintech, senior fintech expert. I spent 7 years in the tech space. I started in telecoms. And then I got into the startup space. And that period of the startup space also really, supplemented my experience as a global thinker, in that I was exposed to around 25 countries globally. Think about spectrum, mature tech ecosystems and less mature tech ecosystems, Asia, US, America, Africa. And, it really helped me see what's happening in the world of tech and how the rest of the world is preparing for the next revolution. After that period, I spent 3 years in the fintech space. I was part of the founding team of one of the, payment companies of 2024, 2025. It was one of the most exciting in the market. We got to around 500,000 customers in less than 5 months.
Damn.
And yeah.
That's incredible.
Yeah. So, and while I was building that platform, as an example, there's part of the platform, that we build in a different market, that is India. And of course, when you're building platforms that scale, it exposes you to the back end. that really enables all this happen, right? So I think those 3 years is when I really got very close to understand the world of data centers, digital infrastructure, data connectivity, and now, GPUs, right? And of course, the financial services is one of the most heavily regulated in Kenya. And of course, the regulation and the ecosystem has some requirements around financial services that they need to host personal data inside the country. So think of it like GDPR. Need to host the data inside the country. So it means whatever the server that is processing that data should be residing inside Kenya, right? Secondly, of course, as you try to comply with the residing your data and processing inside the country, then you're faced with the challenges of the cost of infrastructure. Okay, so that experience really showed me the gaps in the digital infrastructure space. So as an example, infra as a capex is very expensive for technology companies. So most of them end up not complying. And what I mean by not complying is that they end up hosting their workloads on the likes of AWS, Google Cloud, Microsoft Azure, who do not have their data centers sitting in Kenya. So you see that already is a tricky or a bloodline in terms of compliance. And so I asked myself, okay, why are there no companies in Kenya that are offering enterprise grade cloud solutions like AWS and the Google Cloud? Why don't we have a Kenyan version of AWS? And the answer was very simple. It is a capital flow problem, right? While AWS is looking to do $10 billion in the Kenyan market, does a Kenyan cloud company have the access to the same resources? And the answer is no, right? And capital flow is also an element of capital priority, right? So as an example, if you look at how the world has been moving, we started with the agrarian revolution, and during the agrarian revolution, there was a lot of scramble for land. So the land was a primary resource. People were buying and investing in and making it productive. We moved into the industrial age, and that's the time of oil and all this, and you can see what was happening across the world with colonization and the wars and whatnot. Then we got the third industrial revolution, which was very heavy on telecoms, right? So that's when you see the big companies, the big tech companies of today, Safaricom, Airtel, all these are telecom infrastructure companies, and there you have the telecom towers and whatnot. Now we are in a different phase, which is the fourth industrial revolution. And this is all about robotics, data, artificial intelligence, like blurring the physical and the digital world. Now, the real estate behind this new industry is very different. It's not tower infrastructure, it's not land, it is not oil, it is not machines. It is actually digital infrastructure. In simple words, data centers, compute GPUs, compute high-performance servers, and ISPs that enable that data to flow for you. So in simple terms, how I define digital infrastructure is while roads move people and goods, digital infrastructure moves your data.
Thank you so much, Derrick.
Thank you.
Joining Derrick is, I like how he mentioned capital flow, is the money. Not that Derrick doesn't have money, but I mean the money. I like that you brought your money partner here. Bwana Erick, please introduce yourself, say hi, and why should I listen to Erick? Who are you and why should I care?
Thank you again, Ivy, for the humble introduction. My name is Erick Renji. I've been in the market, capital market and ecosystem for the last 22 years. I've worked for several investment banks, big ones, just namely Standard Investment, Renaissance Capital, SBG, Sterling Capital, which I set it up from startup many years ago. And just recently, last month in October, I was able to secure my own now. It's called a brokerage firm called Kestrel Capital. So I'm one of the owners of Kestrel Capital. You can look it up on LinkedIn and whatnot. It was the first management buyout in the Kenyan capital market space. So it was an exciting time for us. And before the acquisition last month, early on this year, I was able to set up my own fund management. So I'm the founder and the CEO of Tradiam Investments Services Limited, which will be working closely with Derrick. Okay. Yeah, and with that, the idea that I've always been thinking about has always been, I need to be different. I cannot be asking for a seat in the table. Let me own the table. So in a nutshell, I own an investment bank or a brokerage firm, and a fund management. So those are two different licenses that are regulated by the Capital Markets Authority. And currently, with what we are seeing with the CISs, that's the collective investment schemes, they have been doing really well. Quarter on quarter, we've been doing over 100 billion. And that clearly shows that there's a lot of money out there. So just thinking about what my good friend here is asking for, he's asking for capital. And I think Kenya has the capital base to be able to finance him in the infra of what he's looking for. Yes.
Okay,
Thank
lovely. Fast management buyout. Sorry, Eric. What does that mean? What's a management buyout? Why is it the first in 2025? Sounds like we're late.
It's not just 2025 in the capital market space. So what used to happen, or what has been happening, is that there's brokerage firms, there's fund management firms, and it has never happened that a staff within the firm went and bought the firm. It has always been the firm has either been sold 100% to somebody new, or has closed down, or is existing, but because of the transition of the generations, maybe from father to son or father to daughter, we have a few examples. So this one became quite unique because the CEO of Kestrel Capital, Francis, and myself, we worked together. And when we talked sometime back last year, we set up an agenda to say, we have been in this space for the last 20 plus years. There's no way we are going to stop what we are doing or what we know and start going to farm. Why don't we acquire a business? And from his end, the owners of the business were willing to sell. But then now the problem is we were competing with other interested institutions. And hold and behold, it was not an easy acquisition. We are competing with a global investment bank that actually did an IPO to raise funds to acquire the business. So sometimes we pat ourselves in the back when we say we outsmarted an international firm. So that's the reason you need to hear me out, because I was able to outsmart an international firm.
Good job, good job. So I even wonder, should we be clapping now or after you... but you bought a profitable firm.
Yes, so
you're
again,
okay.
Yeah. So just also to give context in that management buyout.
Yeah.
So we acquired the business as is, as a going concern, with all the staff. And it's a profitable business. It's a business that has been in existence for the last 30 years. Actually, it's the pioneer investment bank and the stock brokerage that brought in research in Kenya. It was set up in 1995 by one of the founders of, we can call it, the capital market.
Yeah.
And he set up a research firm.
Yeah.
He actually used to work in the New York Wall Street. And when he moved into Kenya, the idea was, let me set up something that I love doing. And when he set it up, he used to ask people, why should I buy these shares? And people would say, because the price went up.
Yeah.
And he realized there's a gap. The Kenyan space is not able to comprehend research. So he went and set up the first research department. And going forward, he targeted foreigners. Around the 1995 going to 2000, there was a lot of frontier market appetite. And what happened was foreigners started coming into Africa, into Kenya. And he was the first person to be able to give them good service because of the research. And from his experience in the Wall Street, he was able to execute using the SI unit of the international trading practice, best trading practice. Yeah. So it became a pioneer in that space of the Nairobi Securities Exchange.
Okay.
And it's been a member for the last 30 years. We just celebrated 30 years. And while doing so, that's the same time also the management buyout happened.
Okay.
Yes.
Good. Congratulations.
Thank you. Thank you. Yeah.
All right. The Kenyan market cannot comprehend research. Are we doing better? Because now I want to go to Derrick. And you said you've moved in. Data centers are changing the world. And they're changing economies. And I want to get in as Ivy. And I'm sure a lot of my viewers also want to get in. where do I start? I think start by, what does a data center do for me as Ivy who interacts with a phone or a laptop or an iPad on a day-to-day? What is it? What are we looking at here?
Absolutely. So maybe I start by my company.
Yeah.
So I'm the co-founder of a company called Siscom Technologies.
Siscom.
So Siscom Technologies is a cloud, data, and AI company. One of the things that we do is that we develop the data and AI infrastructure that powers businesses that want to run solutions in cloud, or businesses that have early instances for agentic AI and those type of applications. So why we went for this within the ecosystem is that we want to be the real estate owners and the people that power these businesses, because ideally if we don't exist, it means so let's say Ivy Core, let's say it's an investment bank, right? You'd need to burn a lot of money in capex trying to build your own data center, or trying to invest your own high performance servers, your own AI GPUs. Then you're trying to manage something that has nothing to do with your business. So we help you focus on your core business, which is serving customers with investment products, while we provide all this infrastructure as a service to you. So it becomes an OPEX on your end instead of being a CAPEX. Now the excitement now then becomes that now we have invited, or we are thinking of innovative solutions with the likes of Tradiam Capital to be able to invite investors to be part of the supply side. So investing directly into this compute. Now, just to paint for you a picture of what this means. The US, which is the market leader globally, has 5,000 data centers. Okay, Kenya has less than 5 private data centers. So you can just see the gap. I was in Hong Kong in April, and such a small market, and I think 6.5 million people, has 122 data centers. Okay, so what are data centers? Data centers are the data warehouses where data is stored, right? So think of it this way: if you have a video on your phone and you upload to Google now is your Siscom. They're the ones that stores that data for you, and they charge you for it, a small fee on the Google Drive, right? Then apart from just hosting or warehousing that data, there's an element of data processing. Mm-hmm. So processing is where applications come in. Mm-hmm. So let's say your digital bank is processing a data to return to you a request, right? And then there's transmission. So transmission is when you're on your phone and you're requesting something on your bank, your ISP, who is probably Safaricom, Gakuu, is carrying that request to the data center. It is fulfilled, then returns you a response. So that response can be, send a message, send a WhatsApp message. Your carrier carries that, it's processed inside the data center, and then returns you a successful request, which is okay. It has been completed, right? So the closer these data centers are to you, the consumer, the faster the speeds, the better the experience, and the easier we are able to comply with the data protection laws. So you can think of it this way. A Google data center sits in California. So every time you're doing something in Google, your request is actually going all the way to California, or maybe a CDN in Abu Dhabi, or a CDN in South Africa, then comes back to you. But if it's sitting in Nairobi, you can imagine the speeds. So this is some of the opportunities we are looking at Siscom. So now the reality, and this is numbers that are there on the Communications Authority website, the demand for cloud and AI infrastructure, so data centers, high performance compute, and now GPUs in Kenya as of today is valued at $1 billion. So that is roughly 130 billion Kenya shillings. That is unmet demand, right? And while Erick will say capital is flowing, this capital is flowing into other industries other than technology. And if you look at the numbers globally, today technology is the highest ROI industry, I think 18 to 25% according to Forbes. And specifically in areas of semiconductor, you can look at NVIDIA, it's a chip manufacturer. You can look at Oracle, it's a data center company. So Siscom is an Oracle of sorts, right? You can look at the XAI and these companies, right? So then financials, healthcare is the second industry. I think it returns 15 to 20%. Financial services, 12%, 15%. Real estate is 18 to 12%. So, our question has always been, And this is how we really got synergy with Erick. I told him, why are Kenyan investors not getting exposure to this investment class that is the most exciting? We use our phones all the time. We're always on our phones. We are always downloading apps. We're always doing digital transactions. The world is aggressively, digitizing. So that was a question. How can we start to give investors exposure to these asset classes? And technology is huge, but the most stable asset class in technology is actually the real estate, the physical infrastructure that powers that technology. And that is data centers, fiber cables, internet infrastructure, towers, compute, and GPUs. And maybe just to finalize now how we, break it down all the way so that you as Ivy can get exposure into this. So we are demand first. Okay. So we source for demand. So we go in the market and ask companies that have the demand for cloud compute, the demand for AI GPUs. We ask them, what is your projected demand over the next 5 years, right? So we aggregate that demand, and as of today, over the next 5 years, we have aggregated demand of around $5 million, $1.25 million in high performance compute. So think about as servers, around 1.75 in storage.
This is Kenya only.
Yeah, Kenya only in storage compute, and $2 million in AI infrastructure. And then next year we are partnering with some modular data center, developers, to understand now the demand in that area. So if you look at $5 million as part of the 1 billion demand according to the CA, it's a small fraction. So you see now this $5 million as guaranteed demand is then what will come and sell out as an investment opportunity. Okay, so and we have done this. We did it privately, so we are doing private placements within our networks, and we're able to cluster up the first computes of around 500K. Just by selling it privately to our friends, to people within the network. So now with Erick and working very hard with fund manager, we are looking at now taking this to the next level, increasing participation in a compliant, regulated, and sustainable way. You can own a server, right? It's very, very straightforward, model. You own a server. It's like the way you'll own an apartment. A business, an SME that needs to utilize that server, sits on that server, pays every month. Okay. So there's recurring revenue. Okay. So they pay lease, rent, revenue to sit on that server. They have a guaranteed leaseholds over at least 5 years. Okay, and because of IT is also very obsolete. So the server starts to become obsolete year 6, year 7. But for 5 years, we have guaranteed leaseholds on that server. So we have a supply side, then we have the demand side who meet together and exchange value. So now the problem then we solve there becomes that you, as an individual investor in the Siscom ecosystem or the Siscom cluster, you're able to supply a small business that is a technology small business, an ERP hosting company, a web hosting company. You're able to give them your machine. They sit on it, right? They pay every month, and then this revenue share. Because then there's managed infrastructure in between, power, because they consume a lot of power. There's internet, right? Then there's operations involved in that server.
Oh, Siscom is like a landlord.
Yes, like an agent.
You're an agent.
Yes,
so
you are an agent. We don't own the infrastructure. The infrastructure is of investors. Perfect. Okay. We are the Uber of digital infrastructure.
Okay.
So we have suppliers who buy and own servers. They dedicate to our platform. On the other side, we guarantee that customers will sit on that infrastructure, generating income. Then there's rev share.
Okay, so where does Erick come in? Where do you come into this value chain?
I think in an easier term, I'll be the platform for people to access.
Yes.
His ride.
Okay. Yes. My guy. Yes, that's how it should be. Okay, fine.
Yeah.
So how much do I need to? How much do I need to get in? How do I even end up? How do I know that Siscom is the best? Why should I do this? Okay. Really? And what is it going to cost me? Yeah.
So before Erick goes, it's very important for me to highlight what you just said.
Yeah.
So Oracle is a 20-year-old company. Okay. So if you buy an Oracle share, you are, I think, CD in terms of shares. Like you have no direct control and you have no direct benefits in that company. So think of Siscom as an oracle that is building from today for the next phase.
Okay.
Right, and for the future. And that is Kenyan, that is setting up its clusters in Kenya, enabling Kenyans to be compliant with data protection, pushing for data sovereignty, because data sovereignty is very important. Data sovereignty is where does our data reside? Because who controls that data has a lot of control on us. The data has to reside inside the country. I need to know that, okay, my personal bank transactional data sits somewhere on Mombasa Road, not in California, because then I don't know what that company is driving, the intelligence is driving from that. The people that invested in Oracle infrastructure directly, they raised $1 billion, $100 billion just the other time, and they co-invested $500 billion with the SoftBank into what they call, there's a big data center they are building in Texas to power OpenAI. Okay, so now the people that invest in those companies are hedge funds and the big private capital in the US, right, that is already has appetite for tech. So what we are saying that we don't have the big hedge funds in Kenya, how can we empower Ivy to be a hedge fund and invest in this, invest in this new asset class? Now, when you invest, we cluster up the infrastructure, and Kenyan versions of OpenAI, Kenyan versions of Safaricom, Kenyan versions of the big data bricks, the big data companies, the web hosting companies now have an opportunity to sit on the very infrastructure that is local, generate value for local people in Kenya shillings. So now the companies don't need to pay in dollars to AWS; they can pay in Kenya shilling because they know that it's Kenyans that are supplying them with that real estate. So currently, minimum entry, because it's still very private placement, minimum entry is like $20,000, which is a full compute cluster. But now whatever we are innovating with Tradiam Capital will enable people to have exposure from as low as $1,000, $500. So just democratizing investment in that space.
Erick, you're saying?
Yeah, so I like what Derrick has just said. There's the initial $20,000, but where I come in is to get now people to invest the $1,000. Let me give you a good example. Just recently, the NSE changed the rules that you can be able to now buy one share or two shares, a single share. Initially, it was in batches of 100. Yes. So now for Derrick, when it comes, he wants now to be able to make it easier for the mwananchi to be able to buy. But I'm also putting in something, so like a sweetener. I want to package that product. Also, we'll be able to sell it to the pension funds, to the high net worth, to anybody who has the muscle and maybe is over securitized or is over invested in the bonds, treasury bills, and so forth. So we are just trying to get them to give them an extra or a different investment class or a different investment product just to add on to. Because right now there's this thing we are calling special funds. Why have they become so famous in the last 5 years? Is because historically it has always been you're either investing in the local stocks, the bonds, and maybe cash at hand or cash in the bank. But now we are saying we need to capture what AI is offering, what has already succeeded in other countries, and package it for the Kenyan. So I'm coming in and I'm saying I'm going to stand in between Derrick and the client and package something that has to be approved by CMA. So I'll make sure that I work within the confines of CMA so that it can be part and parcel of that investment asset.
Okay.
Yes.
Good. Now let's talk money. So I put in 1,000 today. First, whatever we're discussing, it's already regulated. Is it? Are you guys regulated?
No, that's where the
I am
product is
regulated.
You are regulated.
Yes.
Do I need... So Siscom doesn't need to be regulated?
No. It's
Tradiam is regulated,
yes,
so whatever
regulated.
Tradiam does, it's fine. CMA
Yes.
will give it a tick.
Yeah, actually, I have a CIS, so we call it an approval. That's collective investment scheme.
Okay.
It's called Tradiam Unit Trust scheme.
So this is a collective investment scheme.
Correct.
Okay.
Yes.
Something similar to an equity fund or a balanced fund or a money market fund.
Thank you.
But now you guys are calling it an infra fund.
Yes, so we are trying now to coin out that product
Okay.
that we'll call now the infra.
Okay.
Yes.
Tell me about what will I make after I put in, let's say, 100,000 Kenya shillings? What am I looking to make back from my money?
So interesting question, and that's what everybody has been asking.
Yeah.
So we are saying like an IFB.
Okay. Good.
Will give you probably between 14 and 18%.
Okay.
A special fund.
Tax free. Let's remember that.
Yeah. Oh,
So you have to put all those things. Put them for me.
tax free.
Yeah.
Let's call a special fund.
Yeah.
Will give you between that 18 and 20%. Again, tax free to an extent. After tax.
After tax.
Yeah, that's after tax. So we are here now. We are saying with what we are looking at the numbers out there, that they can be able to give a return of what is it, between 18 and 20% on the dollar.
Yeah.
If we convert that, we are at 25% easily. But now, how do you package that to be able to be consumed by the local mwananchi?
Yeah.
Now, this is going to be a first. Actually, maybe we needed to have mentioned that.
This
Yes.
is a first.
This is a first.
Yeah.
Maybe I think I work on firsts.
Yeah. Exclusive to Just Funny podcast. Awesome. Yeah.
Yes. So this is a first. Yeah. Something similar to what we are doing with Derrick, a first, is why don't we have ETFs that are listed that you can be, instead of going to buy 5-10 shares in the stock market, why don't you buy into an ETF that has those 5-6 stocks, and you're buying one which gives you exposure to all the 5. So this is where now we are doing it. We are saying Derrick needs money to be able to do the infra, for you to be able to get the 20 plus return if converted in Kenya shillings. And everybody now will not be running to get an IFB tax free or a special fund. They'll be saying, I want an AI infra data center, data center. Data center, yeah.
I'm going to put it a t-shirt right there. Data.
Yeah. And this is on the fund management side of things. Remember, I'm wearing two hats. There's the brokerage side of things, but on this, the fund manager using the Tradiam.
I just want to know about now Tradiam. So so where does the money go? Who's your trustee bank, custodian bank?
So what happens as right now we are still in the process of creating that product. We've been having engagements with the regulator. It's been going on for
Things not ready.
No. So
if I have money now, I can't buy.
private.
Why you
Private.
No, there's
private. You can come directly to.
Yeah.
So you can come directly. That's what I said.
Yeah.
We've done a proof of concept through private.
Okay.
Friends and family. So we
must.
pitch it directly to, because we needed to prove the concept.
Fine.
We needed to prove, first of all, can people really get excited about this? So it's extremely very private. We have an investor roundtable. We usually do some of these things at the Capital Club, where we just meet and we discuss what's happening. So since we already and you see, like I said, because it's private, it's also very expensive. So it's 20K, and what happens with the private is that actually you own the infra. It's you own it. It's your infra. So it's the payback is purely lease income back to you as a landlord, right? But now what we've been doing and engaging with the Tradiam and the regulator is now to make this a bit more democratized. A lot of people can be involved in smaller capital. We don't need to. Siscom doesn't need to deal with 1,000 people, 10,000 people. Like, how can we pool resources, channel them into this? So that product is in R&D currently, and we foresee that it will be available publicly around Feb, around Feb, March, with compute as the first, and then AI GPUs, and then, like I said, around August they will have modular data centers, which is a very interesting concept, but very high capex.
Okay. You keep talking about
as well.
GPUs. What's a GPU?
In the world of compute infrastructure, you have your traditional, computers that run on CPUs, which is central processing unit. So the thing about those traditional CPUs is that in terms of computation, they can only process one request at a time.
Okay.
Right. So that way they're just slow. So think of it as just your traditional car. It can just do a certain kilometers per hour, no matter how far you push it. Now, NVIDIA and NVIDIA came up with a GPU that now it adds turbo to that machine.
A graphic
process unit. So now a graphic process unit is able to do multiple simultaneous computational requests at the same time.
Okay.
Right? That is why it's been very powerful with things like artificial intelligence, because as you can look at, artificial intelligence is intelligence not human. As a human being, as I'm talking to you, I am looking at you, I'm scanning the room. There's so many things I'm doing at the same time.
Yeah.
That is what traditional compute could not do.
Yeah.
It can only do one thing at a time. Now with these GPUs, you have now turbocharged that machine to be able to do a lot more things at the same time, right? So now this GPU technology, now in terms of compute, has now enabled faster processing. Think about once we complete this podcast, there's an editor that needs to sit down and edit it and render. So GPU is able to now render that. If you are doing it traditional CPU, let's say rendering in 10 minutes, GPU cuts down that into a minute or two because it's super fast. Rendering interior design, think about mathematical formulas, think about research. Now think about chatbots, which is just a function of artificial intelligence, robots, IoT. All these things are going to be 100 times more faster by using this new set of technologies, right? Now, the painful part is we have very little footprint of GPUs in Kenya today. So it means Kenyan businesses don't have access to this turbo charged technology, and that's such a big disadvantage, right? Because XAI alone is doing $100 billion of this technology. So this is also just the painful and the emotional side of things, that again, if we don't invest in the infrastructure, Kenya and Africa will once again become a net consumer of technology, and it's happening, right? It's happening with ChatGPT. A research 2 years, I think 2 months ago, said that Kenyans are the most active on ChatGPT.
Yeah.
ChatGPT is not a
I think
Kenyan company.
It wasn't 2 years ago.
Yeah,
It was this year,
2 months ago. Kenyans,
2 months ago.
ChatGPT is a product of OpenAI, which is not a Kenyan company, right? Their data center or their infrastructure supplier is Oracle, CoreWeave. Those are American companies. So if you think about when you pay monthly subscription to use ChatGPT, that money ends up in whose pocket?
Not yours.
An American investor, a Japanese investor, global investor, not a Kenyan investor. Now, if you put that money in Siscom Edge AI, and then a Kenyan company comes and builds their own version of ChatGPT, now when you subscribe to that platform, that money ends up where? In a Kenyan investor's pocket. As simple as that.
It sounds, there's a lot of ifs. So we're just beginning. Are you sure it's when? Because it sounds like there's a lot of ifs, which brings me to the question.
Yes.
What is the risk related to this? We all know there's no investment that's risk-free.
Absolutely.
And maybe this goes back to Erick, because you understand this. You've been doing it for 22 years. What is the risk involved in this? And also, maybe you can also circle back, and Derrick can also join in. Data centers require so much energy. People claim that jobs will be created through data centers, but how much can this big building really do? Because I don't think they'll utilize a lot of human capital. They require a lot of water. There's so much ethics behind it that I'm not particularly sure. Would I, based on my value systems, this is something I'd want to get in. So Erick, tell me, what are the risks associated to this when the fund is finally launched? What should I be looking at when it comes to the risks? And then now Derrick will talk to me about the next question.
Okay, good question. So I think with what we have right now, we have, 5 private data centers? Yes, and they are up to standard, international standards. And currently that's where we will host.
We are hosting.
Where Derrick will be able to host. So if you're looking at that energy or water, there's already, a house that is ready to accommodate that. There's actually an empty space that we need to fill. Actually, we are selling that space.
Yeah, okay.
That's where now we need to go and do a capital raise. Yes. There's a product here we can create, and it can become a new asset class. So when you're doing an allocation as a portfolio manager, you are allocating and saying, I'll buy 30% bonds, I'll buy 20% shares, I'll buy 10% infra, I'll put 20% on cash on call, and so forth.
So what's the risk of me putting that 10% into this infra?
So the risk is there.
What could happen?
But-
What if these 5 data centers kick you out?
No,
Okay.
What's the risk
So
associated with this investment?
So we already have oversubscribed demand
Okay.
in our stage of the business. So like I said, this is paperwork that we sometimes share to the private, our own company investors. We share with them. So like I said, securing demand is the fastest way. Is a fast way to mitigate. Because you need someone utilizing the infrastructure. So securing demand. So we only raise capital against committed demand. And this is a global standard. So as an example, just again 1 month ago in the news, there was this big headline that Oracle had secured committed demand from OpenAI worth $100 billion. So you remember that, right? So what that means is they'll comfortably finance $100 billion worth of compute and data centers because the guaranteed customer on that is OpenAI, and OpenAI is growing. Okay, so so for us, we have a cloud platform and service provider. They're called Lyrid. It's a Silicon Valley Indonesian company that is setting up a zone in East Africa to serve Kenyan customers. So they have given us committed demand over the next 5 years, estimated at around $1 million. We have 3 financial service providers who now have combined $4 million worth of compute demand over the next 5 years. So every day we are looking for companies that have demand for that, either global that are coming to Kenya to expand their services here, or local that are operating in a very highly regulated environment like financial services, banks, investment banks, tier 2 banks, tier 3 banks, MFIs, payment gateways, fintechs. All these are the driving force behind the demand we have. So that is just the first part of it. The second part of it is that we collocate the compute in tier 3 data centers, and the tier 3 data centers have everything in terms of redundancy or backup. Everything is N+1, so everything has backup power. They have substation from the main power provider, but they also have backup generators. They have UPS. They have solar in place because in the world of cloud, you have to guarantee customers 99.999% uptime. Because when this goes down, it means you cannot access your banking app. Then how do you do transactions? So tier 3 level of certification ensures that at a data center infrastructure layer, the infra or the compute or the GPU or the server is always running 99.999% of the time. Okay, so now the other way we work extremely very hard to make sure that the infrastructure is going to generate value is that we, apart from just doing infrastructure as a service, we as Siscom are aggressively innovating value-added service other than infra. So as an example, we have some of the most disruptive solutions around agentic AI use cases. So think about financial services have demand for customer lifecycle management. They have demand for automated reconciliation. They have demand for data analytics. They have massive demand for now training that data and having their own AI agents that now replace human beings to be able to just do this around the clock. So those are the indirect use cases that guarantee or that push up utilization of the infrastructure. Now, finally, we also get commitments from the existing local data centers in terms of pricing for their own real estate, to just ensure that they will not wake up tomorrow and say, a kilowatt of electricity is now $500. So these commitments go into years, just make sure that at least on our own, the cost structure is very predictable. Yeah.
If I'm diversifying my portfolio,
Yes.
so I should have something in the infra fund. Should I also be looking at getting shares in KPLC? Should I be also looking or energy companies globally if I want a bigger piece of the pie?
Correct.
How should I come in here?
Absolutely, and that's why structuring these products for sustainability is very important. So, like I said, digital infrastructure is also an ocean of possibilities. So today, like I said, we're doing purely compute. So today, if you invest, you're buying a compute, you're buying high performance server, you're buying a GPU, you get an ownership certificate of that GPU, you dedicate it to a cluster, we manage it for you, you get monthly fixed leasebacks as of today, right? But as we continue structuring the product, we will move now into data centers themselves. So we'll create a data center fund. So today we have a compute fund, private compute fund. Then we'll move into data center fund, and we actually now even exploring how we can expose sophisticated or just Kenyan investors into now the energy powering all this, because cloud and AI are one of the massive drivers of energy. In the US, they have even gone back to nuclear because their grid cannot satisfy the demand for energy that AI workloads and AI infrastructure has. So as a matter of fact, on 4th December, we have a conversation at the Capital Club with Mr. Erick as well, and the CEO of Kenyan, and we have some other guys from Best Energy Optimization to look at how is the energy generators looking at the AI opportunity. What are they putting in place to make sure that, because Kenya can actually position itself as the biggest green energy provider, and this can attract other data centers other than Siscom and other than the existing data centers. So you think of it this way, because of the excess energy we have, we attract Oracle as an example. We attract core with that houses OpenAI, and then all OpenAI all of a sudden is running their workload inside the country. These are 1 gigawatt data center demand. Okay, so today, as an example, we are co-located at IX Africa, and they are, I think, they run 4 megawatt of IT load, and they're expanding to be able to get to 22 megawatt of IT load. So then, in terms of innovation, we are really thinking about, do we create an energy token product and put tokenization, blockchain tokenization on it, so that someone can diversify in infra, compute, data center, energy, and even a startup fund, the AI startups that are going to utilize all this, so that we create an ecosystem of digital infrastructure investments that are diversified, sustainable, but most importantly, retain value inside the country and her IROI.
Maybe even data center real estate trusts and stuff like that is where this is going to go to. You said it's still open to the private investors. Yes. Where do I go? So how do I reach out?
So you just reach out to us at Siscom, and www.siscom.africa or .tech. You get us. We also host these monthly engagements at the Capital Club, where we tell you a bit more about what we're doing and the ticket sizes, right? So in that case, like I said, you'll be buying compute that is supplying a certain client.
And 20K USD is the minimum, because you said there are different ticket sizes.
Yes, okay. Yes. So it depends with the compute requirements of that customer. So so currently we are doing 20K because the compute requirement is high performance as well as storage. Okay. So now for that, it's like I said, fixed leasebacks. So remember, the client is paying us every month leasehold. So we net the costs of OPEX and, just managing the infrastructure for you. And then, for 20K, you're looking at 280 to 350 USD per month. Okay.
In my wallet.
Yeah. Once the infrastructure, the infrastructure is running, because remember, there's a customer that is waiting to sit on it.
Out of the 20K USD, I'm getting the 280 USD per month in my pocket.
Yes. You'll come in through the investment roundtable. You'll invest in a node. A node for us is the equivalent of a compute cluster. You'll get an ownership certificate of that node. So you'll dedicate it to our cluster. So in this case, we become your managed infrastructure partner. Running custom operations, configuring the customer, and making sure we collect money from the customer. Okay. Then, so now the monthly leasehold from the customer, less costs of running the infrastructure, is your share of the revenue, and that is deposited fixed every month in your wallet on Siscom. Okay.
Is there a minimum amount of time the cash needs to stay with you before I can start collecting my return?
Yeah. So for starters, it has a 4-month grace period because of shipping. Okay. So unfortunately, this infrastructure is not in Kenya. So we ship them from the US, and then we do further customizations in Dubai, then customs, clearance, setting up at the data center, operationalizing it. So we've just, given a 4 month grace period to just cover that. And then because it's prepaid, just like rent, the 5th month, you start to get your share of the lease backs from the lease earned from the customer. So remember, the customer is on the infrastructure for at least 6 years during its operational time. So it's the if you look at the annualized rate of return, it is very it's quite significant. Mostly because it's also high tech and it's high revenue generating asset. It's a high revenue generating asset. So if you take a server and compare it to an Uber car, an Uber car is you managing everything from end to end. This one is you dedicate it. It's running a data center 99.99% of the time. So there's no sleeping. There's no all this. And so we've given our investor the discretion to exit at year 4. So Siscom buys that infrastructure from the investor. Of course, less depreciation, right? But the good news is that by year 3, you'll have broken even. And, year 4 is pure rev play. Year 5 is pure rev play when you exit. But we are hopeful that a lot of guys will recommit, which means investing in a new infrastructure or in a new advanced tech that will be available at that time. So compute between 15K to 20K USD. GPUs are between 50,000 USD to 70,000 USD. But then GPUs have like 8 years. So currently we are sourcing for demand. We have not started clustering them, but for compute, they're live and you can participate as we speak.
Okay.
Yeah. This product is designed for customers that really understand technology. They see the opportunity, and it's more than just the ROI. It is those people in the industry. So as an example, if you look at our private investor roundtable, 70% are people who run tech companies. So they already know the pain point. So they can put in, and somehow again their companies are going to be the ones that are running on that infrastructure. So they understand the pain point, they understand the patience, they understand that by us running this model like this is the only way we can drive cloud costs low, right? Because then we don't have large overheads, because we would have large overheads if we invest in the capex ourselves, then try to operationalize, which is opex. But in this case, you see the investors are our capex suppliers, right? So we are just opex. So that way we're able to be lean and nimble. And that is how we are 20% cheaper on dedicated server costing per month. We are 20% cheaper on shared, cloud services per month. And we are up to 35% cheaper than global providers, because more than just the compute, global providers still charge the final customer on the dollar. And that is the vision we have. Drive down costs, push compliance, because compliance is very key, right? And then make sure that value remains in the country. A punchline is always this. Every day we walk in the office at Siscom, we always ask ourselves, how can a small shop on Moy Avenue enjoy the same benefits of cloud, the same way a big enterprise customer like a telecom in Kenya is doing, right? And how can a typical small ticket retail investor, get the benefits of supplying the very infrastructure to that small shop on my avenue? So it becomes a closed loop ecosystem that it's growing rapidly. The growth has been very interesting on what we're doing.
But will the retail investor truly benefit? Will that person in Moyaveni truly benefit, or is this for those big people who run tech companies? Because also when you open it up to retail, are you assuming that the people who are going to invest in it understand tech or even care? Us here in retail, what we want to know is, how much do I need to put in? What will I make back? Is it safe? Because there are scammers. Is it actually really going to benefit me? Because what I predict is people commenting and saying this is just going to be for the wealthy. If you don't have that $20,000, you're not going to make any money. I'll tell
you the long and short.
Yeah.
You see, we run developer bootcamps to enable emerging software developers, from institutions, to develop AI applications, and even subsidize our infra for them so that they can use it, right? And one of the things that I feel so sad about when it comes to our technology ecosystem is that it's very small. So if I ask you, which tech company do you know in Kenya today that is as big as AWS, as big as Oracle, as big as OpenAI, as big as Databricks, as big as all these 100 companies that are listed on the American stock exchange. How many do you know in Kenya? None. But you see, those guys are not there by chance. There is a lot of work they did before. And that is why they have 5,000 data centers. And we have 5. Right? So this is an investment in the future of not only you getting something in your pocket, but unlocking a technology ecosystem. If we have one of the biggest, digital infrastructure footprint in Kenya, okay, that means we will naturally make supply and demand. We will make it affordable for the demand side. The demand side, that developers, SMEs, people that build solutions for SMEs, because now they can afford the cloud. So they can build more solutions in the cloud, right? And if they can build more solutions in the cloud, it means they can enable that small shop on my venue directly or indirectly with a cloud solution. It can be a financial management solution, can be an accounting, can be selling online, can be all these things. It has to sit on the local cloud. So if we expand it, now the big picture becomes Uganda, Tanzania, Rwanda, all these countries are copy-pasting our technology strategy and they're copy-pasting our data protection strategy. So these Kenyan companies become the ones that service those regions. And then the thing then we export, or the thing then that forms a big chunk of gross domestic product, stops being agriculture. It becomes technology. And if you think long-term, technology services, be it solutions, be it developers, be it AI solutions, are going to get us closer to $1 trillion economy compared to the other things we're doing. Right? So that's the big picture.
Yeah.
Right? We build a big, robust ecosystem. More people are innovating. More people are building solutions because it's cheaper to build and deploy. We will even have, in the next 10, 15 years, more technology companies going to the NSE to list. Right? Because you have to build the ecosystem.
It starts
And we are the building blocks of the ecosystem.
Yeah.
It starts with infrastructure.
Yeah. Are you able to take me to a data center to see?
Yes.
Yeah. We do.
What it is
data
that
center-
to tell me it's cluster, node. Are you able to show me? What,
Absolutely.
Okay.
So, in fact, when you express interest that you want to own a node or invest in a node on Siscom, we take you to the data center.
Yeah.
We took Erick and a couple of other people to the
invested?
data center. Yeah, so they
allowed to say it.
they see the clusters, they see what is happening, because a lot of the local ecosystem players have not been exposed to this. As an example, I just give you, because this facts out there. Our partner data center is a $50 million investment, hugely from outside the country. Okay, so now the rallying call is, how can we challenge ourselves, be it, like Erick said, the big institutional capital or the big high net worth individuals or high net worth family offices, all the way to the smaller investors. How can they get exposure to this exciting high-tech industry that anyway, whether we subconsciously know it or not, we spend so much time on our phone.
We do.
Google is a data company, but it just serves you with products that you use. You subscribe to Google Drive, you subscribe to YouTube not to see ad, or you pay YouTube to show ads. Those are data companies, those are cloud companies, just like Siscom, that are build value-added services that are targeting Kenyans. But do you know who is the final beneficiary of the capital? Western companies.
Yes.
I'll give you another interesting example. Okay, if today I took an Uber from here to, let's say, Westlands, and let's say that trip is going to be 100 bob, just for argument's sake. Uber charges 25% platform fees. Okay, so what happens is, a moment I pay that 100 bob, 25 bob has left the country, because Uber is not a Kenyan company, neither is their bank in Kenya. So that man immediately leaves the country. So the driver and the owner of the car, who is the investor, have been left with 75 bob to share among themselves. So the driver is going to fuel at Shell global companies. A huge percentage of that, again, just leaves just like that. So let's say if this car is being refinanced, right? Remember, we don't manufacture cars here. So another big percentage of that money goes to the original country where the car came from, Japan, all these countries. So you remain the 25%, 25 bob. 25 bob, maybe 5%, 5 is transactional fees. So the actual value of that entire trip that remains in your economy is 20 bob, right? So how do you stop that capital flight? You make sure that the next Uber is Kenyan. And how do you do that? By giving them this sort of infrastructure, high-tech ecosystem to develop and build these solutions so that value remains inside the country. And if that company scales in Uganda, as an example, now you see now it's Uganda's exporting capital to Kenya. And that is how you build an innovation economy.
And maybe should be for Erick. Maybe Erick, put value into perspective for the retail investor who is thinking, honestly, I don't care if money stays in the country. Why should we care for money to stay in the country? How will it end up coming back to me as Ivy?
That's the problem that many people have been talking about. We always consume goods from outside. But for us to be able to, even just simple, bring our interest rates down, we actually have to have our own money. We have to consume our own goods so that even our shilling becomes strong against international currencies. So it's buy Kenya, build Kenya, buy Kenya. So we need to start appreciating what Kenya has to offer. An interesting conversation about M-Pesa. It made Kenya be the financial hub of Africa. I think right now we stand the opportunity of investing in this foundation to be able to keep this whole AI excitement in Kenya, so that Africa can be able to respect Kenya as they respected how M-Pesa came in. So it's for us. We have a generational opportunity to be able to change the direction of Kenya, not just exporting coffee and consuming from outside, but now even giving data centers or even hosting for other countries. Just to give a historical background, in 2018 December, we had less than 76 billion in the CIS funds. That's in 2018. As of June of this year, we have almost 700 billion in the CIS. So that means money has left the savings account into investment products. And the famous one currently everybody's talking about is the MMF, Money Market Fund. And the uniqueness about that MMF is that over the last few years, it's gained traction because of the in and out, the flexibility. When I look at Derrick here, he's saying we will start creating opportunities for the local mwananchi. And I, as a fund manager, I'm looking, I need to be able to deploy my money to give me the alpha returns. The alpha returns is maybe the 20%. Currently, when we are looking at where the treasury bills and where the market is on the interest rates, it's much lower. And that has been affecting the return on the MMFs. If I can be able to plug in to Derrick's opportunities and I package it and I come and sell to the investors, even targeting the mwananchi, not the 20,000 USD, but the 1,000 or the 500 USD, or small ticket sizes. I'm giving the client exposure to the next frontier of investment products, but at the same time, I'm giving him an alpha return because already Derrick is giving me a high interest rate that will be able to stabilize my MMF instead of it coming down when interest rates come down, actually because of we have been consuming and the demand for data centers will always go up and has been going up. I'll be able to have a stable, high interest rate so that I'm giving you 15-20% plus as compared to maybe we are sitting on 11-12 right now. Remember again, MMFs have they're regulated to only be able to buy into or invest into securities or products that have an 18-month shelf. But as a fund manager, you always have to look at the next new thing, the next thing that will give you a good return for you to be able even to make your client happy, to be able to make him even want to invest more money. The Kenyan culture has never been a savings culture or even a reading culture. What do we need to do? We need to change that. but it needs to start from somewhere. And for us, and from where I sit, especially in the Capital Markets Authority space, I'm looking at opportunities. I'm seeing a lot of clients who are already savvy on the investment platform. They have a savings account. Now they have an MMF account. They have a special fund account. They're looking, what's the next thing? And I think this is what you're trying to create is the next big thing, the infra fund, whereby we heard about the rates. Rates came to play not too long ago, but suddenly now people can be able to a building can come up and everybody chipped in and you start earning. Yeah, there's the D rate, there's the I rate. D rate is the development fund rate. I rate is the income that you are getting from that infrastructure that was created from. This is what you're trying to do. Derrick is what he's trying to do is to have a new investment class for even the fund managers. Right now we are like 47 and we are all in bonds, equities, treasury bonds, all those. What else? There's CPs. That's the corporate papers. What else can we add on top of that?
Yeah.
Yes.
And I think what excites me about what Siscom is trying to do and what you guys are trying to do is at least give me good returns. That's why when you say you're going to give 18-20% on the dollar, I perk up. And it's a passion of Derrick, because Derrick also really likes to talk to give the new investors, who are the Gen Zs, something exciting. And Derrick told me something, and I want you to talk about it actually before we move to the question segment. You said the reason the Gen Zs are not investing in the NSE is because they are bored. What is Kakuzi? What is Rea Vipigo? What is Williamson's tea? So you're bringing something exciting. Please talk to me about that. Yeah,
absolutely. And I think we've done this evangelism in so many places. I think the last time we met, it was at Algiers. And I was still doing the same evangelism. I was asking myself, there was a big expo there by Afrexim Bank, and it was agricultural machinery. It was guys doing, it was guys doing textiles. I kept asking myself, where are the tech companies?
yeah.
And that was happening 2 months after I had gone to AWS Amazon Web Services Summit in Hong Kong, and the expo had young companies doing agentic AI. It was tech packed. And I could look at that floor and I could estimate the value of those companies. It was trillions of dollars, right? And that's where the value is. And look at it this way. Today, the most valuable company just crossed $5 trillion of market capitalization, NVIDIA. NVIDIA is an infrastructure company. It is not a software company. They build the infrastructure, that the GPU chips that power everyone else. So NVIDIA in our world is a Siscom, right? Now, NVIDIA at $5 trillion, Microsoft at $3.3 trillion, Tesla at 2.7, Oracle at 2.5. It means if Africa was a tech company, it will be number 5, 2.4 trillion.
If the continent...
The combined GDP of 54 nations is half the market capitalization of one company called NVIDIA. Yeah. This shows you the power of tech. Okay? So for us, for me, I'm always asking myself, why is it that we don't invest and power technology? Because it has to be enabled, right?
What is the
but
answer
I
to
understand.
That, Derrick?
Sorry,
what is the answer to that? Why don't we? How are you telling me Africa is number 5? What's the problem? Based on your beautiful research and your 10 years of expertise and the trips you've taken around the world. So what is the problem, actually?
Yes, the problem is, you see, Silicon Valley has a very robust venture capital industry. These are the guys that write checks to startups that are extremely risky. They are taking a bet on extremely risky opportunities, and you see they end up paying.
Yeah.
Right? You can imagine Facebook beginning in a college room, and there's someone who actually thought this thing could actually fail, but if it works, then I'm at 100,000. I'm 1,000% covered. Right? And those are the same conversations we need to have, right? China has a very big government-backed startup fund that gives startups angel funding or early-stage funding to risk and try out new things. VCs work like this. They have a fund they're managing. They expose it to high-pot 10 companies because they know 7 will fail. But the 3 will be so successful, the exit will cover the 10 plus a return on investment. So it has to start with capital. right? And that's why for me, I feel like the solution to answering the question of why don't we have a lot of high tech companies in Kenya coming up has to be corresponding to the reality of how can we start to have capital flowing into early stage ideas like Siscom. So when I come and pitch Siscom, instead of looking at the risk, why can't we have that mindset of like, this thing has massive opportunity. I don't know what they're doing, but they have massive opportunity. Why? Because globally, companies like Siscom are $1 trillion, right? But this is not built overnight. It is a 10-year, 20-year vision that is continuously supplemented. Now, I'll tell you what will happen if Siscom starts to be very successful with infra fund. There'll be another startup that will come up with a startup fund, right? And they will be solving the problem of, yes, there is a capital flow problem, but it's also a problem of where is the capital, okay? So Europe and the West, they have capital, right? That's why interest rates are going down, because there's excess supply of capital, but they don't have they have a demographic disadvantage. So they have an aging population. Germany is really struggling with the new industries, all these things, because their population is really aging. This is what was happening in China and India the last 2 decades. They had the demographic advantage. Today in the world, Africa is the only continent that has such a good demographic advantage, because we have very youthful population, energized, always online, digital savvy, right? Which means they are going to be the consumers. They're creating the market for the digital products. Chat, investment, digital banking, all these digitized products, the consumers are in Africa. And that is why those companies and those global investors are paying attention to Africa. They're investing in tech. They're investing in data centers here, because they know the opportunity is not here yet, but it's coming, right? So now, as Africa has that demographic advantage, right, but problem of capital, there's 2 questions that we try to answer. How can we enable that flow of capital from those who have into Africa, and especially into tech? That is why Siscom now partnering with the likes of Tradiam Capital, we build the platform, that intermediate capital, right? Because capital needs to find less risk, needs to find sustainable opportunities and all this. So that's the first part of the work we do, in intermediating this capital and telling them, guys, but you can invest in African tech, because we have people like Erick and all these people that are de-risking the opportunities. Okay. Now the second problem becomes, while naturally a lot of the a startup in America would a founder in America would raise $1 million from their friends and family. As a Kenyan, I can't raise $1 million from my friends and family. They don't have that capital base, but they have $10,000. They have $5,000. So the next part becomes now, how can we build a platform that can pool this 10K, you see, 10K USD from 10 people, and now we have 100K USD, because now that pooling is able to unlock something. Now, with that element of pooling, there's also relevance of the investors' own experiences. Okay, our grandparents were exposed to a different industrial revolution, which is very agrarian. That is why Kakuzi stock makes sense to them, right? Now, when you came to our parents, so as an example, when I was building financial services, I was speaking to a different class, and I knew with a cool payments app, I would never attract my mother, because she grew up in a world that didn't have payments and tissue and pesa, and she said, this is what I want. That product is relevant to that generation. So my mother and the people from her age are more likely to invest in telecoms, because those are the companies they saw growing up. So now Gen Zs of today, born 1997, 2000, all the way back, they are attracted to the Teslas, Meta, Google, all these companies of the US, because those are the products they interact with every day, right? So they understand technology, they understand cloud. So now, for us, we are saying we are packaging our investment solutions to specifically speak to them, because they relate. And then with the element of growing up with a company or growing up with an investment opportunity, they can actually say, oh, by the way, I actually grew up with Siscom. I saw them beginning at year 1. Now they are 10 years. They have a capitalization of $1 trillion. I don't know. They are now 20 years. It's a company of their generation. They grew up with. And tell you what, the more we enable developers, software, SMEs, startups, is the way we also going to have an AI wave of companies that these guys can also grow up with, so that by the time they go to the NSC, they invest in companies they so grow, companies that solve problems, companies they interact with every day on their mobile phone.
Well said. Jesus. When you see my neck, you're right. Because I want my kids to grow up with Siscom. I do. Absolutely. And then their kids will, so the Siscom will be there. Kakuzi. Let's get into the question segment. All right, you know what time it is. It's time for the Just Money hotline. You call, we listen, and together we unpack your real life questions. Business, money, career, or culture. Let's see who's on the line. Kelly, hi.
Hello.
You're here with me, Derrick, and Erick. Please shoot. What's your question?
So my name is Kelly Mata. I'm a data analyst. I joined with the CyberSafe program. And my question to you today is, how does the expansion of local data center capacity directly support or act as a catalyst to the growth and international competitiveness of the domestic fintech industry in our country?
I love that. That's a brilliant question. Thanks, Kelly. Stay on the line so that you can get your answer.
Absolutely. So, Kelly, I'm going to answer your question in two ways. And of course, as a data analyst, you know, when you run your models, you need compute, right? So, probably the compute you're using today is provided to you by DigitalOcean, which is an American company, or is provided to you by Contabo. So they'll give you a small server to run your instances. So these companies, being American, number one, it means you are forced to pay with dollars. And then when you pay with dollars, you're not able to use your M-Pesa to just make that transaction. So it means you have to go into the card conversation and all this. Then you have to figure out the exchange rate. Just by the exchange rate alone, you lose value that is needlessly lost. And then, so now what expanding local capacity means, now tomorrow, you'll have the same competitive product where you just use a Kenyan, you run your workloads on a Kenyan server, you're billed in Kenyan shilling. If there's any challenges, now you are not trying to chat some American or an Indian guy, you're just calling directly to Siscom, or you can even walk to our office. It's local support, local currency, right? And, local enablement. Now, if now it's not you personally running your instances and you're running them for a financial services company, remember, any fintech or a financial services company is dealing with personal data. So it's dealing with my name, it's dealing with my ID, it's dealing with my transactional data. And this is happening in a heavily regulated industry, which is regulated by the CBK, Office of the Data Protection, Capital Markets Authority. And the first thing they ask financial services is where is this going to be co-located? Where is this going to be hosted? And do you have a backup? Do you have redundancy? Because a financial service company can never run one server. They need to run multiple instances, so that if one goes down, they always have a plan B. So then expanding this locally, it means now the fintech companies don't have to burn capex trying to run and manage servers themselves. They can just walk into Siscom, they lease this. It means today, if they have 1,000 customers, they're sitting on one node, and tomorrow they have 10,000 customers, they can scale on demand. They can just say provision more compute for me, because if that doesn't exist, it means they have to wait for 2 weeks before they can take that extra load. And then obviously, of course, from a tech perspective, in financial services, something called transactions per second. So like how fast can your system handle multiple customer requests or multiple customer transactions every second? So as an example, M-Pesa recently stepped up. They said they used to process 4,000 transactions per second. Now they're doing 8,000 transactions per second. What that means that at any particular second, 8 people could be on that platform, and it's stable, it is not lagging, it is fast, and it's processing the request, right? And you can see the massive infrastructure they sit on. I think they have 7 data centers. They are running 700 nodes. So if you're a fintech and you're not M-Pesa or not Safaricom, it means then you can't compete. So now, as we take that away that away from you and say, okay, by the way, you can be as competitive as that big company, because you don't have to worry about investing in this massive compute. You can just lease it, because if you work all the way back, there's a pool of investors that are enabling you to not burn capex and just lease this on demand. And of course, there's an element of the closer the data center is to the customer, the faster. So there's low latency. So there's data sovereignty, there's local currency billing, there's flexible billing, While AWS will never negotiate with you when your check delays, you can call Siscom and you can say, my payment has delayed. Please don't disconnect me. I will pay in the next 2 weeks. And we can do that because you're a local company. We can give you local support. We can give you managed infrastructure. We offload all these cloud and infra things from you so that you focus, on serving your customers. And I just want to finalize by saying the importance of fintech companies not burning capex on infra. So before a fintech company, because these guys you're offering an application that can be accessed by millions of people, you can't predict customer behavior. You could launch your application today, and then tomorrow the market leader is down. So it means that all those customers are trying to come to your platform, but you don't have the compute to handle that extra demand. Your system will fall, right? So, and if you were to say, okay, I anticipate 1 million customers, then it means your compute is going to be at least $500,000 that you need. So you need to have that money on day one before even you launch your application, so that you can ship these things, collocate them, start running your services. But with our model, it's not capex. It becomes just an opex. So from $500,000 capex all the way to $1,500 per node. And let's say if you only need 2 nodes, you see, you've literally come from $500K conversation to $3,000 a month conversation. So it's plug and play. And tomorrow you can scale up, right? You can scale up, say, oh, I'm getting more traffic. Give me more cloud, give me more compute. We provision that in hours. In less than 24 hours, you're up and running. You're taking extra load. And let's say if a couple of months down the line, you need to scale down, you can just say, all right, now I need to compress my workloads, free up the extra capacity, and we don't charge you for that. Now, if you were owning the infra, it means you're stuck with extra infra. If you close your business, you have extra infra that you never needed. For us, if you close your business, we could reconfigure and give it to the next guy.
Wow.
Yeah.
Okay. Kelly, was your question answered? Do you have a follow-up question? You're good?
Yes, my question is answered. Thank you very much.
Yeah. So I like that. What you're doing is also beating the traditional institutions
Absolutely.
that bog us down.
Yeah.
That bog us down. In your endeavor, Derrick and Erick, you guys can't ignore the policymakers. You can't ignore the government. And I know you came on set and you mentioned that the president of the country has made a particular announcement. So I want to know what your feelings are of what it is. As you said, tell me what he said and what it is that you feel about it. And do you have plans to partner with the government later? Because truly for you your dream is audacious. You can't ignore our people. Yeah.
Absolutely. So as an example, you see it's policy that is even mandating companies to host their stuff locally. So let's say you're small, you're a small digital lending company somewhere downtown. You need to build a digital platform, right? So that you can offer your services on an application or on a website where customers can come, fill in some questionnaires, you give a credit score, you disburse money to them. So you see, with the data protection, it means you need to ensure that the data is inside Kenya, right? So can you now think of it this way? That small digital lending, that small lending guy downtown now needs to go and purchase a server, set up that server, run it. And if they go to the data center will not give them a colocation space of a single server. It will be minimum 5 servers, right? So now remember, the pressure is coming from data compliance. So now that person will start to look for alternatives. So who can solve this problem for me so that I don't have to burn the capex and just rent it? So you see, now from a policy perspective, our existence enables that person to comply. The government is happy, data resides inside the country. They have a compliant data processor. By the way, Siscom is regulated both as a data controller and a data processor. So we have the mandate to provide cloud services, data analytics, data processing services to any Kenyan company. Okay, so we help them comply. Okay, number 2, in terms of thinking, I think the government through the Ministry of ICT also has set itself some ambitious targets regarding SME digitization. Okay, so what is SME digitization? SME digitization is smaller companies. I think there are 7.4 million smaller businesses in Kenya using some form of digital thing, a website, an email server, a data analytics application. And according to the IFC, an SME just integrating some form of digitization in their solution is able to increase their revenue by around 150%. And only 20%, less than 20% SMEs in Kenya have somehow been digitized. So we are looking at over 6 million SMEs out there that need digital cloud-based solutions. So now that's an audacious goal by the government. How do we support it? We support it by providing the foundation where developers or technology companies can build on that foundation to serve those particular SMEs. Third way I've seen government do this, they recently signed $1 billion data center project in Olkaria by the G42. The president was there. The chief cabinet secretary was there. It's supposed to groundbreak. I don't know why they've not started groundbreaking, but it's $1 billion data center sitting in Olkaria, taking advantage of the geothermal green energy. Okay, as you can look at that audacious goal, it is still being funded by the Gulf investors from the Gulf. So now the question is, and we spoke to the people from the Ministry of ICT as well as Foreign Affairs last week on Friday, and they've invited us to go and pitch this to them. We're asking them. We have seen the government push for a sovereign wealth fund, okay, and there's also an infra fund. So Ivy, I know you do a lot of research around investments. I want you to go look at a spread of where Saudi sovereign fund invested in the year 2024 to the year 2025.
So you just say last year, so that
yeah. So they a huge percentage of the investment has gone to Tesla. They've gone to X. I think Elon Musk was there. They're investing in American technology companies. Their sovereign fund is investing in tech, right? Because they know that's where the opportunity is going to come from. So the question is for us now: these big funds that are being set up by by government, can they have priority? And they say per the percentage, like this percentage of this fund will actually go towards building digital infrastructure. Okay, the same way they say this will go towards building roads. Roads are moving people. Railways are moving cargo. Planes are moving cargo and people. Digital infrastructure is moving data. Mm-hmm. So we need equal, commitment towards building that infrastructure. Okay, and then expanding it. You see the way we say our train will go there to Rwanda. Why can the government invest in cross-country fiber cables that carries Kenyan data all the way to Uganda? It means those guys will be consuming our data the same way Safaricom is doing a deal with Meta, which is the parent company of Facebook, to be the ones that are reselling that pipe that they're bringing to Mombasa. Okay, the last time we were doing these ambitious things, I think, was back in during times of Bitange Ndemo and Mutahi Kagwe, who commissioned the first undersea fiber cable to Mombasa. We need that sort of visionary thinking, to be able to take a maximum advantage of the upcoming tech opportunity. Yeah.
Oh, very cool. Where does my data sit? My passport stuff. Where does it sit? Where does the government? Where is my data, by the way? Is it in this country? Where is it?
So
where is
yes,
the citizen? Where is it?
Yeah. So So I believe those guys used to do on-prem. So there was a big on-prem data center at Nyayo House. I think they do some on-prem setups.
On-premise.
On-premise, yes.
You really
so they
have
do it on their
OpEx on-prem data.
On-premise, so they do it on their on-premise. But now I believe their service provider, has those clusters sitting in one of the data centers, and we're also pursuing them to be one of our partners or demand drivers for this infrastructure.
Data for the whole country sitting in Nyayo.
Partly. So partly, but now you see they have now the ERP. They have the solutions that are being built by the likes of eCitizen, by the likes of ECS, and those are the type of guys we need. We are looking at enabling as Siscom.
Interesting.
Just making sure that we can make sure that Kenyan data sits. So usually, because of data privacy, I would not tell you exactly where that.
Yeah, I can tell you're guarded. Yeah, I can tell you're guarded.
It's collocated.
Yeah.
But it sits inside the country, and that's an area we're also looking at in terms of service infrastructure support.
Okay. Yeah. All right. Let's close out. Erick, you've been very quiet. I just want to close it out. Is there anything you want to say in case everybody forgets everything that's been said today about data centers and OPEX and CAPEX? What would you like people to take away from this conversation, and an actionable insight in particular?
For me, what I would want is just for people to understand that as much as you can buy shares or bonds, there's this new product we are coming up with. It's not new per se, because in other countries it's existing. We just want people to see and to appreciate there's something that Derrick on the infra side of things can provide. And it's not just Derrick, it's the whole country and the whole continent. Yeah.
Okay.
We need to start thinking about our data.
Yeah.
We need to start thinking about AI and bringing this AI conversation home.
Yeah, I like it. And start it early, get in early. I think that's the other thing I like that you guys are offering. You're offering a fast mover advantage. Get in now.
Yes.
Because a year from now, if you're starting to hear about Siscom, you're too late.
Yes.
You guys had the first episode. What about you, Derrick? Parting shot. Close it out for us.
Okay. So I would say the next big opportunities are already here in the AI space. Okay. They're going to be companies. This revolution is going to give birth to very great companies. Okay. That are doing things in healthcare, agriculture, financial services, education. They're going to be all those AI instances, and people are going to invest in those companies. For us, we are making sure that those companies are sitting on our infrastructure while they're doing these cool things. And while they are sitting on our infrastructure, we are making sure that you, as an institutional, private or retail investor, are benefiting from that infrastructure in your pocket through a return on investment.
There you go.
Yeah.
I love it. Take part in Africa's future today through Kenya, because Kenya, is always a pioneer in these matters.
Absolutely.
Reach out to our guests on LinkedIn, Derrick, Gakuu, and Erick Renji. Please Google Tradiam, Google Siscom, go to your bank account and see whether it's something that you should participate in. He said that you can get in privately, which means it's an exclusive opportunity for you to start and see the proof of concept, and then maybe decide what happens thereafter. Please subscribe. If you've enjoyed this conversation, hit that subscribe button and also hit the notification bell so that you can know when other conversations are uploaded. We upload every Monday. Leave me a comment. Let me know how this conversation moved you. If it didn't move you, let me know what it is that we can do better. And of course, always let me know who it is that you'd like us to sit here. We've already said with Erick, we have to bring him back so that we can now discuss the trading side of things. The next time I bring Derrick, I'm going to bring another techie person here, and they'll have a lot of debate and a lot of conversation. Remember, it's not just your regular podcast, it's just money. Bye.